This may possibly be the most monumental news in Bitcoin history. The Federal Reserve has just announced an unlimited quantitative easing program. Could this possibly be the catalyst to spark the next Bitcoin bull run? Let's dive in and analyze. What is going on, ladies and gentlemen? Crypto Kirby here, your cryptocurrency expert, back with another edition of the daily live stream. If you're unfamiliar with quantitative easing, we'll discuss what it means, what it is, and how it could potentially affect these markets, because this, my friends, is absolutely unprecedented here. Unlimited QE. Now, in addition to that news breaking, the charts here, my friends, Bitcoin could be setting up for an absolutely explosive move right here in the short term. So as a full-time trader, I'd like to discuss with you my strategy, my game plan, and how I plan to crush this market right now in the immediate term. So without any further ado, you guys already know the deal. If you like these daily crypto videos and nightly live streams, smack that thumbs up button, click the subscribe, tick the little bell, and let's get this crypto. Moon the likes, ladies and gentlemen. Moon them up, all right? So we'll begin with our Bitcoin technical analysis. And of course, before we begin, this is not investment advice. This is not trading advice. These are only my own opinions, ideas, and speculative hypotheses on the market. Always do your own research and your own due diligence before investing or trading, as this market is extremely high risk, and I am not your financial advisor. I will never tell you what to do with your trades or investments. That being said, let's begin first with the news. Now, you guys know I don't generally care about the news here. On this channel, I let the charts tell me. The charts tell Don Carbonaccio generally what's going on in the news, because more often than not, the news is actually rubbish. It's absolute garbaggio. The price action is usually justified by the mainstream news outlets by some sort of occurrence, and it's generally not true. Generally what it is, there's sellers or there's buyers, and that is pushing the price action, and then, little average Joe and James at the water cooler, they need something to talk about, so the news outlets give them a piece of news to justify the move, so that in their little imbecile brains that they can understand what's going on. But today we have a piece of absolutely crazy news. My friends, the Fed has announced essentially an unlimited QE program. Now, this is in an attempt to keep the market supported throughout the widespread panic and absolute uncertainty in these markets right now. I mean, it's no surprise, my friends, the traditional markets have been getting absolutely hammered. I mean, let's just take a quick look here, just in case you haven't been following. I mean, this is the this is the S&P 500 here, my friends, an absolute debacle. This here is the Dow Jones, an absolute debacle, and this right here is the US dollar. As you can see, completely inversely correlated. The demand for stocks right now has been absolutely pitiful, and the demand for dollars has been absolutely tremendous. That is what you see during a stock market crash. Now, with quantitative easing now essentially becoming unlimited, what that means is that they're essentially going to be buying a ton of debt, okay? And what that means, my friends, is that there's essentially going to be a lot of new money being printed into the system over time now, right? And this is in an attempt to keep this economy propped up. And it's not just the U.S. economy. The U.S. economy definitely has ramifications for the global economy. I mean, it is one of the main economies of the world, right? And the way I look at it is you need all the functioning parts of these different first world countries. They need to be functioning correctly in order for the whole world to function correctly, right? And right now, with the amount of jobless claims we're probably about to see coming next week, I believe they put out that number, with the amount of layoffs, with the amount of potential small business bankruptcies that we're going to be seeing as a result of this worldwide debacle that's going on right now. This announcement, my friends, really is a game changer here, because basically we have to understand that at this point forward, they are willing to print as much money and buy as much debt from the government in an attempt to prop up the market. And this basically goes against everything. Well, it actually goes with everything that Satoshi basically was envisioning when he created Bitcoin, right? And that's that, more Bitcoin can't just be printed. It's not inflationary after a certain point, right? There's a set amount, whereas with something like a fiat currency, there's essentially an unlimited amount. And that's what we're seeing happen right now, is that there's probably going to be a lot of new money entering the US dollar ecosystem over the next several months to years now in an attempt to keep this propped up. Now, this could be big. We're already seeing that in gold. We are seeing a bid there today, up at the time of recording about 3.6%. Silver as well, up about 4.7% at the time of recording. Although, my friends, we are seeing that the stock market did not respond in the same manner. Those at the time of recording are actually down 3% on the Dow and nearly 3% on the S&P as well. So what we're seeing right now is that gold has caught a bid here purely because why? Gold is very similar to Bitcoin in terms of the fundamentals, right? It's a fixed supply. Sure, you can always mine more, but there's a cost to do so. You can't just print it out of thin air, very contrary to the US dollar, right? Silver, very similar. And right now with Bitcoin, we are at a point here, my friends, where this is time for Bitcoin to put up or shut up here, in my opinion, right? We're seeing the economy is crumbling. We're seeing the financial markets crumbling. And now, to put the icing on the cake here, we have this announcement here for an unlimited QE program. Essentially, that's unlimited money printing until they can try and get the economy to work. If that doesn't work, I mean, basically, you're left with a whole bunch of inflated capital in the system now, right? They've printed a whole bunch of money, lowering the value of all of the other money that's already in the system. And if that doesn't stimulate the economy, all you're left with is a bunch of lesser valued dollars than you had before, and the economy's still in shambles. And that is why, during those types of periods, theoretically, things that are rather deflationary, similar to Bitcoin, similar to gold, can have an inverse correlation, right? As you print more dollars, the value of the dollar goes down, and the demand for deflationary assets goes up, right? That's essentially the hypothesis / theory behind that. Now, I'm not saying that this has to be a guaranteed bullish thing for Bitcoin. I mean, we haven't seen Bitcoin respond in a positive manner to any of this market turmoil as of yet. Can that change? I do believe so, as all of these markets do go through a deflationary period before you see a rebound. We actually saw it with gold and silver back after the '08 crisis. Let's just take a quick look so you guys understand, as we don't have that on the Bitcoin chart to look at, right? We only have, data since Bitcoin was created, and Bitcoin was not around during the last financial crisis. So this is what I'm talking about here, this deflationary period, right? Right here was the pop in '08, right? And we dumped all the way down. I mean, it was a very devastating dump here. I mean, from top to bottom there, 30%, or if you want to take it from this top here, it was even more like 33%. And then it had the rally, right? As people started to flee the dollar, flee the stocks, etc. That's when gold had its rally. Same with silver. And it's very possible, my friends, that we could see something similar to this in today's market. Doesn't have to occur. Past performance does not indicate future results. But what I'm saying is that we pretty much just got word now that we are going to see an inflated money supply in the world reserve currency. And as I showed you in the beginning, right now, the US dollar, the world reserve currency, is essentially looking to retest 4-year highs, right? This was back in 2016. And right now, we are very, very close to tapping that level. And keep this in mind, my friends. The last time that we saw the US dollar decline for a year straight, right? This was from late 2016, and it declined all the way to January of 2018. Okay? Keep that in mind. Essentially, right here, we started January 2017, essentially, and it ended January 2018, a full year, okay? Now, let's go back to Bitcoin. and look at that year. I just want to pull it up here, my friends. Let's go from January of 2017, right around here, okay, to January 2018, my friends. I mean, you can't make this up, right? You can't make it up. Bitcoin's most parabolic bull run in history, taking the price from roughly around $800 all the way up to $20,000, was a direct correlation with the year-long US dollar bear market. Right? I mean, it's clear as day, my friends, what happened there. Now, sure, it could be chalked up that wasn't, it was just a coincidence, right? But what you have to understand is that when the dollar is losing value, people are looking to get out of dollars and into things that can appreciate versus the strength of the dollar, right? Whereas when stocks, for example, right, are depreciating, people are not looking to hold the stocks. The demand for stocks is not there, so they sell them, and there is demand for the US dollar, and that is why you see this go up like this, right? So what I'm saying here now is it's possible that over the course of the next few months, once the panic and uncertainty starts to ease up, we could start to see with the printing of money that this dollar index starts to drop again, right? And right now, I mean, in my opinion, it could already start to drop on this news, but I think that the panic in the market is just too widespread right now, my friends. Too many people just still want the dollar, right? But at some point, if the printing of new money becomes intense, I mean, it wouldn't surprise me to see this fall off. And just like I showed you, when this was dropping last time, we saw Bitcoin go absolutely bonkers, right? And it's possible, in my opinion, that that is a time where Bitcoin may show its true colors, right? And that we could see at some point that Bitcoin does actually respond nicely to the inflation that's entering the system, and that it could act as not only a hedge, but potentially a very nice place for a vehicle of profit, right? From an investment perspective, right? Now, I'm not telling you to invest in Bitcoin. I'll never tell you what to do. This market is way too high risk, my friends. You have to always make your own decisions on that. What I'm telling you is that there's a possibility here that we could see assets such as Bitcoin, gold, silver, potentially, right? It doesn't have to occur. I believe that there could be a potential correlation down the line if we start to see this dollar fall off due to the printing, that deflationary assets would be very nicely inversely correlated to an inflationary one, and we could see a bull run based upon that. Okay, so that's my thoughts there. And that's really more than you're usually going to get from me on a fundamental basis, my friends, because you all know that the Don does not like to speculate on Moonboy Hullabaloo Garbaggio, right? But this news that we got here, my friends, this is not Moonboy Hullabaloo Garbaggio. This is unprecedented, essentially breaking news that we've got here today. And I thought that it would be important to talk about, as just several days ago, this market didn't have that news, right? And we have to understand that, the market changes. It's a living, breathing organism, essentially, right? And the thing is that just a few days ago, we didn't have that news. So it's not that everything changes now. The chart is still what it is, and we're going to discuss that now. But there is a fundamental underlying occurrence here that now could play a role moving forward, right? I hope you see what I mean. And if you appreciate me taking the time to discuss that with you all, I really would appreciate a thumbs up on this video here today. Please leave a thumbs up. It really helps with the algorithm. And if you could leave a comment, it really helps with the algorithm as well. If you could just say, thanks, Kirby. Hi, Kirby. I appreciate it. Wow, anything, my friends. Thank you for your support on this channel. I so appreciate you, and I hope you appreciate me. Let's get this crypto. So now let's discuss the chart, okay? Because, my friends, this chart, still until proven otherwise to me, from a classical technical analysis perspective, still is within bearish control, right? If we take a look here right now on the daily time frame, you could see, yes, we've had what appears to be a V-shaped recovery here, but where we've tapped up to is the expected area that we would get up to before a potential bearish rejection. Now, what do I mean by that? We've essentially climbed right up here into this red box of old support and old resistance flips, potentially looking to create a potential new bearish ceiling before testing back down into this region here. We see that if we use our Fibonacci retracement, right, of this swing here, we could see, let me get this back up. We could see here that on the fib, when we look for our targets, right, that we tested right up into the honey hole of Don Carbonaccio, right between the 0.5 and the 0.618 fib extension targets. We tapped that 0.618 to an absolute T and got rejected. And my friends, we should all know that that is what you'd be looking for in a continuation of a bearish trend, is that you dump, you retrace back upwards to that golden, and then continue your descent to the downside. So I'm not ruling it out of the equation here either, that around 7,100 could have been the top for this move. Doesn't have to be, but I'm not ruling it out of the equation. If we go in here now to the 4 hour, my friends, you know, it is interesting here, right? We have formed somewhat of a rounding bottom, and we are right now forming new local support on top of that local resistance, right? We saw these wicks get up here and get rejected several times. And now, quite the opposite, we're seeing the wicks on this side go down into this range but hold as support. Very interesting. We are still in a stalemate, my friends. I've told you, this range right now is way too risky for the Don to be trading. Far too much whipsaw action here. I mean, just for example, right? Imagine that you're trading this, right? You go long here. Oh, I'm long, Kirby. Get wrecked. Stopped out. You go short here at a break of a support level, right? Oh, I'm short. Get wrecked. Liquidated. Okay. Up here, you go long again, breaking resistance. Get wrecked. Okay. Over here, shorting again. Yes. Up. Get wrecked. There's just way too much here, my friends. Right now, for me, with how I play the market, right? I look for high reward, low risk trade setups. This right now is far too risky for me here, right? It's just a large equilibrium, largely nothing going on except whipsaw action. Look at all of it. I mean, up and down on a daily basis, insane wicks, okay? So for me right now, when we zoom out and understand where we are on a macro perspective, right, we're still at a level of potential macro resistance, even with that QE news that I just told you all about. This doesn't have to be a instantaneous reaction from that news, okay? In Bitcoin world here, many, very, very beginner traders, they think that this is some sort of like slot machine or lottery game where, something occurs and then boom, going right to the moon. This isn't a game like that, little James. This isn't what this is. This is a trading market, my friend. This isn't a game where you just, I'm in, Kirby, I'm in. Am I going to win? Am I going to win? And then in 5 minutes, you're looking to take a win or a loss. That's called gambling, my friend. That is not what this is. This is a trading market, okay? Trends take time to develop. Structures take time to develop. And things such as the QE, that will be, having an effect long term, probably across all of the markets. We're going to see how that gets baked into the cake. For me right now, I still believe there's a real possibility that this could be a rejection zone. If it's not, and we wind up getting back above, let's call it, I would say that this region here for me is where I'd want to see it, my friends. Probably around 8,200. I mean, getting back above this area solidly, right? Back above this range and consolidating would give me some hope that we could potentially look to test upwards further, much further, right? And when we start to examine that, my friends, don't forget that we do have a gap there on the CME futures chart at 85.40, okay? At that point, if we can get back above that red box of resistance I have, I would start to set my eyes on a potential gap fill target around 85.40. And ultimately, we do have a gap still at 11,795. Way too far in the future for me to be really talking about that. Even to be talking about this 8,500 right now, it's too far out. I just wanted you to not forget about those. At the end of the day here, we're we're still underneath this critical resistance structure. If we flip on our moving averages, my friends, we are seeing a death cross right now between the 50 and the 200-day moving average. Just a very classical technical analysis indicator here that if these both cross and they're both slanting down, which they are right now, I mean, that is a very macro bearish looking indicator. Sure, it doesn't have to mean that the trend stays bearish forever, but that's not what you're looking for. I mean, if you're looking for bullish confirmations, you would rather see a bullish golden cross where they're both slanted upwards and crossed like that. Let's get this crypto. So we have that there as well. If we flip over to the weekly as well, my friends, we are below that 50 moving average. We are below the 21-week moving average as well, which I'll flip on for us now, which has been a very long-term, trend defining moving average, right? Look at the orange line, my friends. All candle body closes above it in the bull market. All candle body closes below it in the bear market. Then even over here, all above it. Then in the bear, below it, and we are below it now. Okay, so for me, at the end of the day, the trend still has a lot of bearishness to it. I'm just not seeing anything developing in terms of divergences on the RSI or divergences on the MACD histogram. I'm just not seeing anything right now that's making me rush into a position here with Bitcoin. Now, I am going to be looking for high reward, low risk trade setups. And when I'm personally looking to get into this market, and I will be keeping you up to date in absolute real time with all of my trade setup ideas, my entries, exits, targets, insights, strategy ideas, etc., all exclusively for you in VIP. If you are not already in my VIP, my friends, today is the day. It's time to transform yourself from average Joe into savage Joe. Let's get this crypto. I will see you in VIP right now after this video. Now, I think, my friends, that is going to wrap it up for me here, beyond the fact that, I'm still just awaiting for this to break the equilibrium. And I do believe that there is going to be some insane trading opportunity that comes out of this. But for right now, I'm just remaining on the sidelines and letting the trade come to me, right? I'm not forcing myself into a position here. If I was getting into positions here, I know with how I look to mitigate risk, there would have been a lot of stop outs for me here with break evens, small losses, small wins all throughout here. So for me, it saved me a bunch of headaches right now with playing this chop. This is not that's not what I'm looking to trade for. Don Carbonaccio does not want the little soup in a sandwich trade. Don Carbonaccio likes to come for the whole entire restaurant. Okay, so if you want to see all of my personal trade setup ideas when I'm looking for the restaurant, not the little soup in a sandwich with average Joe and James at the water cooler, my friends, today is the day. I will see you in VIP right now after this video. Let's get this crypto. My friends, one last time for the algorithm, if you appreciate this channel, because I certainly appreciate you, smack that thumbs up button. It really helps. And leave a comment. Anything. Thanks, Kirby. Hi, Kirby. I really appreciate it, my friends. And if you could, share this video. Inform others with the potential long-term either benefits, depending on how you look at it, or negative outcomes from the essentially unlimited quantitative easing program that we just the Fed just announced today. Okay, so share this video with other traders in your chats and your socials. I think it's important for everybody to understand what's going on here. And my friends, I'm going to continue to be looking for potentially life-changing trading opportunity here. So like I said, if you're not in my VIP, that is where I will see you right now after this video. I'll be posting all of my entries, exits, targets, insights, strategies, positions, stop losses, take profit zones, etc., all exclusively for you there in VIP. I will see you in VIP right now after this video. Let's get this crypto. And until next time, the Don has spoken. Be safe, be happy, be healthy. It's your boy, Crypto Kirby. Peace and love, my friends. Curbs.